Achieving financial success takes dedication, discipline, and most importantly, a plan. For over 30 years, Don Reynolds has helped savers define their needs, formulate their plans, and achieve their goals. From accumulation to preservation and protection, and through the income distribution phase in retirement, implementing the right strategies makes all the difference. Your retirement is our business. Welcome to Strategic Asset Preservation.
When I say ROI, most people think return on investment. In fact, I want to challenge our listeners today to think of ROI in a different phase, and that is reliability of income. When you define your goals, you define your objectives and your dreams and your desires in retirement, it comes back to income. We save our investments. We have these things built up. We have perhaps Social Security we'll talk about, and we have in the past, pensions. It all boils down to what is going to be my income, and is that going to sustain and allow me to have those goals, those objectives, and those dreams come true in retirement?
That's a great point. I was just thinking about when Cory was talking about that, one of the things that we really focus on is, like maximizing Social Security. We do a great job, in my opinion, of really showing people, going early versus full retirement age versus delayed credits. And again, there's no right or wrong way to do that. Everybody's situation based on the income they need in retirement will kind of drive that, if you will. So I think it's important, that you take a good hard look at that, because as we've heard before, when you make your election with Social Security, you got to live with it. I think another thing about income, when it comes to required distributions, and folks have heard us talk about the RMDs before, required minimum distributions, and sequence of return risk and how they interact with each other. Because when you have to draw off an asset and it's in the market, it can decimate a person's long-term retirement plan, or if you will, the income plan, because you're losing dollars while you're taking money out, and then you lose time to recoup those losses. So I think that's another key point in income planning that we look at that, potentially others don't.
Yeah, absolutely. And income planning, as Don mentioned, is very important in today's retirement world, because as we're seeing pensions dwindle down and diminish, it's becoming the exception, not the norm anymore. Having that, what we used to call mailbox check, in other words, you get a check every month in the mailbox. Now we probably get electronically or ACH deposited. That pension was a very nice and stable and predictable income that we could rely on and build the foundation upon that. So with the diminishing and returns of the pension going away now, it is something you've got to focus on, and you have to have an advisor that, again, is goal-minded with you to work on that income. Make sure you've got your foundation built, maximize the income that is potential there for you, and then make sure, again, that that's going to be enough and sustain not only today, but in futuristic terms with inflation. I know that's been a hot topic here over the last year and a half, that you want to make sure that your income will be sustained and potentially can grow to help with that inflation in the future, so that you can do what you're doing today 5 years from now, 10 years from now, and 20 years from now.
Absolutely. Those are great points. I think one last thing that I think we do, or I don't know if a lot of advisors talk about this, and it's not a great topic, but we all know you're going to lose a loved one. Generally, we don't always go at the same time. And we focus a great deal on the spousal income planning and protection. Because, when a spouse passes away, if there's a pension involved, potentially they could lose that other half of that pension or the whole thing, depending on how it's structured, if it's a 50% versus 100% survivorship. The other thing is the lower Social Security benefit's going to walk out the door, so to speak, too. And so I think we do a really great job, and I think all advisors need to be looking at that, and hopefully that's falling in line with your current advisor. On your goals, are they looking at that when that day comes? Because we know it will come, and we want to make sure it's not a double whammy, because also what happens is you become a single tax filer, and that really becomes a big point, because you may lose some income, but not only that, you're going to increase your taxes.
Yeah.
So it really becomes a double whammy for folks. So I think that's another point that we take great pride in focusing on when we're developing a plan when it comes to income for folks.
Yeah, and that's one of those 6 core issues that we'll get to in a future segment is taxes. I know we spent a lot of time on this on other podcasts, and we'll hit it again, but that widower trap, when you go from married filing jointly to single, it really hits a lot of people, and it's very, very tough to sustain the high level income perhaps that you were used to, because the taxes will eat into that quite a bit. So those are some important topics and important areas. And again, it comes back to, I think, as we addressed previously, making sure that your goals, your objectives in retirement, that you're aligned with an advisor that can support and work with you on those goals and with those objectives in mind throughout your retirement. So again, today we focused on income. If there's anything we can help you with on questions on that or provide you with the list, we want to make sure that we can get that to you. Please give us a call at 651-773-3859. And again, we can provide you the 6 core goals or objectives in your retirement plan, and or be happy to help you in and go through some of these things in person with you.
No, that's great, Cory. One last thing I want to add. If you have any desire, we have a book. It's actually called Income Allocation. And we share that with anybody who comes to our office if they're a reader. But we'd be happy to share that with any of the listeners if they want to give us a call at 651-773-3859. We'd be happy to get that book out to you. Again, that's 651-773-3859. And with that, we want to thank you all for attending today. Hope you're enjoying the show, and we look forward to talking to you in the near future soon. Have a great day, folks.
Thank you, everyone.
Listen to more with Don Reynolds and Cory Stilp on the Strategic Asset Preservation Podcast by visiting 800preserve.com.
The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Advisory services offered through Brookstone Capital Management, a registered investment advisor.